Do you want to be rich? Are you dreaming of financial independence? Those are the questions that often keep us up at night. The allure of wealth, the freedom it promises is a common aspiration, yet the road to financial prosperity is not always smooth. It's riddled with pitfalls, traps, and common mistakes that can derail your journey. But fear not, these obstacles can be avoided if you know what to look for. Let's delve into what you should avoid if you want to be rich. The first pitfall on the path to wealth is living beyond your means. Let's unpack that a bit. Living beyond your means is the equivalent of sprinting at the start of a marathon. It's a quick way to burn out, leaving you gasping for air with miles still to go. In financial terms, it's spending more than you earn, accumulating debt, and creating a lifestyle that's unsustainable in the long run. Imagine your income as a river. It's your source of sustenance, enabling you to maintain your lifestyle, meet your needs, and fund your dreams. Now, if you start drawing more water than the river can provide, what happens? The river runs dry, right? That's exactly what happens when you live beyond your means. The flow of money dries up, leaving you parched and with debts to pay. But don't despair. There's a simple solution to this problem: budgeting. Budgeting is the financial equivalent of a diet plan. It's not always fun, and it requires discipline, but it's the only way to ensure that your financial river keeps flowing. To begin, identify your essential expenses like rent, groceries, utilities, and transportation. Then, set aside funds for savings and investments. The rest can be allocated to discretionary spending like dining out, entertainment, and vacations. This way, you're living within your means, and also preparing for the future. Speaking of the future, let's talk about saving. Saving is not just about hoarding money, it's about preparing for uncertainties, emergencies, and opportunities. It's about having a safety net, an emergency fund that shields you from financial shocks. And it's about accumulating capital that can be invested to generate more wealth. So, the rule of thumb is, spend less than you earn, save as much as you can, and invest wisely. It's not about being miserly or depriving yourself of pleasures. It's about being prudent, proactive, and prepared. It's about building wealth that lasts not just for you, but for generations to come. Remember, wealth is not about how much you earn, but how much you save and invest. The second pitfall is neglecting your financial education. Now, you might wonder, why is financial education so important? Well, my friends, it's simple. Financial literacy is the cornerstone of wealth creation. It's like the foundation of a skyscraper. Without a strong base, the entire structure can collapse. You see, the process of creating wealth isn't just about earning more. It's about understanding how to manage and grow what you have. It's about knowing how to navigate the complex world of finances, from investments and taxes to the power of compound interest. Let's start with investments. Investments are vehicles that can help grow your money. But without a thorough understanding of how they work, you might be stepping into a car without knowing how to drive. Stocks, bonds, real estate, cryptocurrencies, each of these require a unique set of knowledge, a unique driving manual, so to speak. Next, we have taxes. Yes, taxes, that dreaded word. But did you know that understanding taxes can actually help you save money? There are numerous tax benefits and deductions available, but without financial literacy, they might as well be hidden in a secret vault. And finally, let's talk about the magic of compound interest. Albert Einstein once said that compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it. Compound interest is the process where your interest earns interest. And then that interest earns interest, and so on. It's like a snowball rolling down a hill, gathering more snow and momentum as it goes along. Now imagine combining the power of investments, the knowledge of taxes, and the magic of compound interest. That's a recipe for wealth creation, but it all starts with financial education. So pick up that book, enroll in that course, listen to that podcast, educate yourself. So never stop learning about money. Knowledge is power, especially when it comes to wealth. Another pitfall is avoiding risks completely. Yes, you heard it right. It's not just about taking risks, but avoiding them entirely can also be a roadblock on your journey to wealth. Calculated risks are an essential part of wealth creation. Think about it. If you always play it safe and never step outside your comfort zone, how can you expect your wealth to grow? It's like wanting a plant to grow but never watering it. Now, this doesn't mean you should dive headfirst into every risky venture that comes your way. Not at all. It's about understanding the difference between a calculated risk and a reckless gamble. A calculated risk is when you've done your homework. You've researched, analyzed, and evaluated the potential outcomes. You know there's a chance of loss, but the potential for gain is compelling. A reckless gamble, on the other hand, is when you throw your money at something with little to no understanding of what could go wrong. That's not what we're advocating here. You see, wealth creation is not about eliminating risks but managing them. It's about taking controlled risks where the potential upside outweighs the downside. It's about understanding that failure is a possibility, but if you've done your due diligence, the odds of success are in your favor. Being overly cautious can stifle your financial growth. It can prevent you from seizing opportunities that could boost your wealth. It's like being at a buffet but only sticking to the salad bar because you're too afraid to try anything else. And remember, every successful entrepreneur, investor, or business tycoon you admire today has taken calculated risks. They've stepped into the unknown, faced their fears, and come out stronger and wealthier. So don't be afraid of taking calculated risks. They might just be your ticket to wealth. It's about striking a balance between caution and courage. So step out of your comfort zone, embrace the unknown. And remember, fortune often favors the bold. Lastly, avoiding investing is a surefire way to miss out on wealth. Now, you might be thinking, investing sounds risky. What if I lose all my money? But the truth is, not investing might be the riskiest move of all. Imagine a world where your money is not just sitting in a bank, earning minimal interest. Instead, it's out there in the world working for you. That's the power of investing. When you invest, you're giving your money the opportunity to grow, to multiply, and potentially to generate a steady stream of income without you having to lift a finger. Think about the stock market. Yes, it can be volatile, and yes, there are risks involved. But over the long term, the trend is clear. Stocks tend to go up. By investing in a diversified portfolio of stocks, you're betting on the overall growth and success of the economy. And historically, that's been a pretty good bet. Or consider real estate. Buying a property and renting it out can provide a steady source of passive income. And as property values increase over time, your initial investment could grow substantially. And then there's the option of investing in businesses, either by starting your own, or by becoming a silent partner in someone else's venture. The potential returns can be significant, and again, you're creating a source of income that doesn't require you to trade your time for money. The common thread here is the power of passive income. When you have investments that generate income on their own, you're not just earning money, you're building wealth. You're creating a financial cushion that can provide for you in the future, and give you the freedom to pursue the things you love. Investing is not about getting rich quick. It's about steadily building wealth over time. It's about understanding the power of compound interest and the potential of passive income. It's about making your money work for you, rather than you working for your money. Remember, the wealthy invest their money and make it work for them. And with a little knowledge and a smart strategy, you can do the same. So, what have we learned about the pitfalls to avoid on the path to wealth? We began by understanding the importance of not living beyond our means. It's a common trap, and it's easy to fall into, especially in our consumer-driven society. But if you're serious about creating wealth, you've got to resist the urge to splurge and instead focus on saving and building your assets. Next, we underscored the significance of financial education. It's not enough to just earn money. You've got to know how to manage it, how to grow it. So, never stop learning about finances. Read books, attend seminars, listen to podcasts, or even hire a financial advisor if needed. We also tackled the topic of risk. Wealth creation involves taking calculated risks. Sure, it can be scary, but remember, no risk, no reward. The key is to understand the risks, weigh them against the potential rewards, and take the plunge when the odds are in your favor. Finally, we discussed the importance of investing. Money sitting idle in your bank account isn't going to multiply on its own. You've got to put it to work. Whether it's stocks, real estate, or a small business venture, investing is a crucial part of wealth creation. Avoid these pitfalls, and you'll be well on your way to financial prosperity. Remember, the journey to wealth is a marathon, not a sprint. Happy wealth building.